Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, September 19th, 2025, not February 19th, like I said in our last episode. Ron Q here with my amazing co-hosts David Brill and Josh Klayman. David, Josh, good to see you both. For everyone in the audience who's joining us on LinkedIn or X or YouTube, thank you so much for joining us. If you've got questions for David or Josh, all right, please put them in the chat. We're happy to address them. Usual disclaimers, obviously nothing we're discussing is investment or legal advice, and certainly everything we're talking about, really our own personal opinions, not necessarily the opinions of our respective firms. Josh, I see you are poolside somewhere at the compound. David, Josh, good to see you
or
both.
really in a virtual background.
Fine virtual background, well done.
To be a little fancier today.
David, Josh, it's good to see you both. It's been yet another busy week. David, I wanted to start off with the kind of economic news, Josh, with your permission. Obviously, it's been a big week Fed news-wise, and I'm not talking about Fed governors and all of the political issues of it. David, we got a 25 basis point cut. The moment the cut went through, I turned on our screens, David, and thought, why isn't the price action better than this? David, what happened in the market? I'd love your perspectives on a 25 basis point cut and what it means for risk on assets.
I think there's a little bit of a sell-off before the cut was made or announced. So I think things just normalize after that. I mean, I thought it was interesting. I had never heard of a risk management cut before. It sounds, it sounded like something right out of a bank.
Yeah.
Our risk management department decided we should lower rates. That being said, I think it's good that it was done. I think it's been done too late, as we've all said on this podcast. But it does seem that there is some growing consensus for more cuts coming up, which is what I think generally people want. I do think, and this is something we've talked about on our program a number of times, that this idea of 2% inflation as a target inflation, I think is not a target now for the time being.
Yeah.
Maybe it's 3% as the target, but I think that the idea that we need 2% inflation, I think is just not going to be a data point going forward, at least in the near term.
Yeah, Josh, I have to apologize to you. I used risk on, and I didn't get your okay to do it. So please do forgive me. I've got thoughts, but I'd love, Josh, your perspectives amidst all the text messages you get from me and David.
No, I would love to hear yours, Ron, because I think you and David are really the gurus on this stuff. I'm the fast or slow follower, depending on the topic.
Guru is a loaded word, but I'm going to dive in. David, I thought a couple of things when I did see the 25 bips cut, and there are two things that really jump out to me. And politics aside, I do not envy not only Chair Powell, but anyone in the Board of Governors of the Federal Reserve, because I think there are a couple of really important things that are happening. One is we live in a very odd economy, David, and please tell me if you agree. Inflation, as it's reported, is seeming to be relatively sticky in the 3 area, between 3 and 4. And I'm not even sure that's the accurate data. I simply don't think, and this is not meant to be critical of BLS or how data is accumulated, I simply don't think we have the tools to register data the way we need to register price changes. And when we look at that perspective, it also, the other side of that is employment. And I think employment in this country is beginning to fray at the edges. You often brought up white collar versus blue collar, and I think that's a true dynamic. I think things like healthcare, things like government employment is heavily weighted incorrectly in the employment data. So again, David, I think we are looking at a very weird market where jobs are starting to get a little scary depending on what segment you're in. Inflation maybe 3 to 4%, might be below 3. I'm not quite sure, depending on the measures that you do look at. And I'm going to add one last thing to that, David. In the context of all of this, the thing that I am most concerned about is the growing disparity between the top 10% and the bottom 75, 80. simply because, I mean, there's the moral, ethical aspect of why are so many more people flatlining economically while that top 10% is doing really, really well, but also the impact that has. Because again, you and I and Josh know economic planning happens, job hiring plans happen, how we budget for spending going forward happens across the entirety of the economy, and those questions aren't easily addressed. Let me stop there. I'm only one cup of coffee in.
No, I think you raise a ton of good points. I sort of think about it this way. On one hand, we see credit card delinquencies going up,
Yeah.
car loan delinquencies going up, credit card balances going up. But on the other hand, so I see it as like a 1090, maybe 1585. The 10% of people who own crypto, who own stocks, who own real estate are seeing meaningful appreciation, while the rest of the 85 or 90% are not.
Yeah.
So even if we do see some rising inflation and rising costs, those who own assets have some buffer because they've seen rising values in their assets versus those who don't and are just relying on wages. So I totally agree. I do think that at the lower end of the scales, salary scales, I think the struggles are becoming more real. Not that they weren't real before, but they're becoming more real. I think that the one thing that is good is it doesn't sound like food and gas prices are going up meaningfully. So for that cohort, they're not feeling the inflation. And I think the bottom line is, are we going to see inflation from tariffs or not? And I think the Fed hasn't, has been very like walking in the middle of the road on that. And, I don't know if it's clear to see if the consumer is seeing higher prices from tariffs or not.
David, I just want to respond to that on two things. One is, and Josh, you may be happy to hear this, but the other side of what you're talking about, David, is home prices are beginning to come down in various markets. So Josh, I know you're looking for the eighth or ninth estate to add to your real estate portfolio, but because that's interesting with real estate prices lowering in some markets and interest rates scheduled to come down a total of 75 basis points before the end of the year. David, you could look at people buying more homes, which is interesting. David, one last thing I want to add to this, and Josh, I definitely want to give you some airtime here, and just kidding about the estate, Josh. David, I had an interesting conversation in one of the newsletters I read. I was talking to someone about it, and I think shout out to Anthony Pompliano. If it was him, I believe it might have been him. If not, Anthony, forgive me. Someone had posited, well, why do we need a 2% inflation target? Why isn't it a 0% inflation target? And I know there are very complicated economic conversations about that because anything below zero is now deflation, which is bad across the board, David. But a good question in a way, no?
I mean, if you think about labor as being a big input in the cost of goods sold, I don't know how you could really have a 0% target unless everybody's just not getting any raises.
Right.
And we don't want that either.
Yeah.
I'm not of the view that maybe 3% that's the new normal.
Yeah.
So I'm not as concerned about it. It just depends on where the increases are coming. I'm more concerned, like as an individual who cares about like people in our country, I'm more concerned about the food and gas and those things that affect everybody.
Yeah.
But I am mindful that if companies aren't borrowing and doing, capital expenditures and research and development, that's not good either.
Yeah. And David, to that point, a 2% inflation rate in the wake of what was it, 15 plus years of almost zero interest rates and very low inflation. You're right. Maybe 2% is not the norm. Josh, please weigh in. I'm sorry that I'm monopolizing all the time.
You're not monopolizing at all. Like I'm listening with interest. I can't say, what the inflation target should be. But what I would say is I think it's been pretty interesting, some of the differences of opinion within the Fed. So, for example, I don't know how to say his last name. Is it Mirren? Is it Stephen Mirren? Yes.
Yeah, the newest appointee to the board.
Yes. So my understanding is that he had favored a 50 basis point cut.
Yeah.
And then when we look forward to what people are expecting, at least from what I've read, that there's a wide divergence between what people are expecting at the Fed, right? With of the members of the Fed, ranging from some who are projecting a quarter point hike to
Yes.
others projecting cuts totaling 125 basis points. So it's like
Yep.
a huge range of opinions. I think generally what I've read uh, in the middle, they're expecting 2 more cuts before the year end. But I
Mhm.
think this kind of divergence and this kind of, I think it shows like a meaningful disagreement about what we're looking at for the future. Um,
Yeah.
among people who matter. So not that other people don't matter, but it's very interesting. I think not to like touch on other current events that aren't digital asset or legal or other related, but we certainly are seeing a number of things in the U.S. where there is a great divergence of opinion.
Mm.
It is often coming down along partisan or other lines that even really enters our daily lives in a non-economic way. So I just think that's very, I'm not sure how I feel about such a big divergence. It doesn't give me much um, comfort that
Mm.
that we know what we're doing.
Yeah, and Josh, it's a good point. Like David, the era of unanimous vote decisions on the FOMC are probably over, at least at least for the time being, Josh. And it's a really good point. David, you also brought up one other thing. And by the way, let me pause here. David, what have we done to Josh that she's reading Federal Reserve FOMC market news? Like, I don't know what we did to you, Josh. I could just say we're sorry. David, but to that point, when you look at Fed Chair Powell's commentary, you mentioned tariffs a bit earlier. You and I called this. I'm just going to shamelessly plug it, and several other folks publicly have, where he noted that the tariff impact rather, was much more minimized than they thought it would be, and in many instances, I'm just paraphrasing here, was potentially a once-off. David, were you surprised by those comments? Were you sort of happy that they caught up?
I was giving us a little golf clap in the background. No, I really think that, look, there were different views about how the tariffs were rolled out, and people had different views on it, and obviously they should. But ultimately, I think the three of us were of the view that they weren't going to, make things more inflationary and, bring higher costs, to consumers. And I think our views have been borne out. And so I was just happy to see that. And I do think that sometimes there's a narrative that just develops that
Mm-hmm.
doesn't give a chance for all the facts to be uh, reasoned into that narrative. And it's just that's the narrative we're going with. And
Yeah.
these bad things are going to happen. And, we need to wait for the facts. And that's why, a lot of smart people wait to see what the impact is and then, comment based on what the impact is and not just sort of, oh, tariff bad. I mean, look, in some instances, tariffs are not helpful, but so far we're not seeing an impact on inflation in our economy.
Yeah. David, Josh, in addition to the Fed news, and I suspect the three of us continue to talk about the Fed, which is bizarre. Josh, I wanted to ask you because, in addition to me and you and David looking at markets, in addition to our day jobs and wondering why markets aren't moving in a certain way, we saw the Fed cut 25 basis points. But the other news that I thought was really important, Josh, was from a regulatory perspective, the SEC putting forward streamlined crypto exchange traded product, a process around that. If you would, I'd love to dive into that a little bit. And I will say this, again, I was sort of surprised that crypto markets weren't like, yay, this is fantastic. Josh, do you want to talk a little bit about why that's important? And I did study enough to have some detail, but I would love your perspectives on the importance of that.
Sure. So if you look back over the past decade, right? Actually, longer than a decade, because I think our first Bitcoin spot ETF that was approved was about 10 years after the initial filings,
Yes.
if I remember correctly. And now we've passed that. A
Yep.
big piece of it was actually the exchanges pursuing rule changes because the generic listing standards of the SEC, they didn't fit digital assets, right? Crypto assets. And so this had led, as we know, to a sort of case by case by case by case analysis. A lot of times over that first 10 years, things were kicked back because they said, oh, there's insufficient market surveillance, things like that. And then finally, we saw the Grayscale case, where the court told the SEC it acted arbitrarily and capriciously and denied. So here, now what the SEC has done at a high level is kind of streamline this process, right? So that it doesn't necessarily have to be a case by case analysis. And they've put into place, some eligibility criteria for generic listings. And, so some of this is, for example, if the commodity underlies a futures contract that has been made available to trade on a DCM for at least 6 months, right? As long as there's comprehensive surveillance sharing and things like that. There's other kinds of paths that can be taken as well. And other kinds of requirements that I'm not going to get into right now. But the idea is that this will streamline the process. That I think this is part of a larger push by the SEC, not specific to ETPs or ETFs, which is that we want to have a clear path so that, and I think this is something that I'm going to paraphrase something that I heard from Commissioner Peirce in general in a talk, but clearly I'm paraphrasing my perception of what she said, but which was that, yes, of course, we want founders to be aware of the law, right? We want them to be mindful of the law, but we want the law to be clear enough and we want it to be there so that every second of every moment doesn't have to be thought about, oh my gosh, am I going to run afoul of this law, right? Yeah. To try and have more objective standards, things that people can use to plan so the business is able to flourish, right? Yeah. And yes, we want people to be compliant, but we don't want the regulation to be hamstringing industry, certainly not unreasonably. I think you may have seen also that Commissioner Crenshaw had a dissent, and among the things that she was, in fact, her dissent was, or her speech related to her dissent is called "Passing the Buck on Reviewing Proposals to List and Trade Digital Asset ETPs." So that's pretty clear on how she feels. But one of the interesting points I thought that she drew out in her speech, or her writing, I guess, whatever it was, her response, was that there, in her view, is an increasing conflation of ETF and ETP. So all ETFs are ETPs, not all ETPs are ETFs. And she's concerned that people may be confused about what kinds of protections they actually have when they deal with ETPs. But I mean, I think it should be no surprise to anyone, given some of the pushes of the digital asset space vis-a-vis Commissioner Crenshaw, that perhaps we see this.
David, weigh in on this. And Josh, I did read, or at least to paraphrase, some of what you noted from Commissioner Peirce and Commissioner Crenshaw. David, what were your thoughts when you saw this kind of streamlining? And I'd love to get some details, because one of the things I had noticed was the original comment period, Josh, correct me if I'm wrong, was 240 days or something like that. And this streamlining has brought it down to 75, which is raising hackles from those who seem not to be particularly pleased with this. David, please weigh in on this.
Well, look, I think the speed of how we all work these days supports a lower time frame. And I think if it is an important matter for people, 75 days is still quite a lot of time for people to respond. Look, I got a text question this morning for us related to this was, why haven't people appreciated how big a deal this is? And that, for instance, with the ability to have sort of multi-asset crypto funds, we're going to start seeing sort of crypto index funds. And so I actually think that this is super bullish. Again, we're not giving, trading advice, but what I will say is this is super bullish for a lot of the larger tokens, because there is a whole cohort of people who want exposure to crypto assets, but they might not be able to tell, pick between one of the top 30 tokens or another. whether it be, Avalanche or Solana. They might not be willing to do that level of research and analysis, but they know this is a high performing asset. Bitcoin's up 25%, year to date, almost 90% over a year. They might want, exposure to these assets. And now these, index funds will be able to provide that exposure. So I think this is a really, really big event in terms of allowing retail and institutions, particularly institutions and retail as a follow-on, to buy these, index funds and get, broader exposure to crypto.
David, Josh, go ahead, Josh. Sorry.
I have a question for you guys, which is, and I've been trying to play with this in my mind, just trying to link it a little bit, but maybe I'm finding connections where there really aren't any. With respect to this approval of the generic listing standards, right? And the references, of course, to there has to be, robust surveillance, right? You have to have comprehensive surveillance sharing, things like that. It makes me think about the recent announcement by the CFTC and NASDAQ about the market surveillance that CFTC will be able to do with this NASDAQ tool. I wonder whether any of that is related, because I tend to think that the regulators are trying to act in harmony now to permit things. But do you think that there is some sort of that has anything to do with why having one of the prongs for this generic listing standard be, that the commodity underlies a futures contract that's been made available to trade on a DCM for at least 6 months?
I mean, I'll just throw in my 2 cents, not being the attorney, and I think there's certainly that level of discourse between the two. But David, I think the three of us, market surveillance or market sharing data agreements between exchanges was the big bugaboo for the SEC for a decade regarding crypto. So I think to the extent this is messaging, and I'm not implying that it is from the SEC, but I think it's just putting to bed this false narrative that had gone on for so long, that, well, there's no market sharing, which means markets can be manipulated easily. And, the idea of why they said no for so many years has finally been swept away. Whether or not it's a SEC, CFTC dialogue, I'm not quite sure, but I got to assume they share that perspective, David.
Yeah, when I worked on the first Bitcoin ETF filing, that was one of the things that they were concerned about.
Yeah.
And then, they were also concerned about the liquidity, that how deep were their markets.
Yeah.
And then there was this other idea that, well, it trades 24/7, and how can you prevent, potential, movements or improper movements in the underlying during the hours it didn't trade in the U.S. And obviously other precious metals and other commodities trade somewhat 24/7. So, that was a little bit of a red herring, I would say. But no, look, I think this is really important. And we have to remember, this is not just for crypto assets. This is for, all fund, filings. So I think that's also important. But I really think we're going to look back and see that this was sort of a watershed moment for what I'll call the normalization of owning crypto in portfolios, beyond like the people who, had a demonstrated interest, but really maybe in model portfolios, and just making it easier for different wealth managers and things of that nature to start offering these to their clients.
David, Josh, I wanted, and I agree with you, David, I want to kind of go a little bit deeper on this topic. And I'm not a lawyer, so Josh, David, for a dummy like me, one of the comments, just paraphrasing Commissioner Peirce, was this idea that, pushing back against the idea that this is now a wild west of crypto ETFs. And Josh, correct me if I'm wrong, I believe Commissioner Peirce noted something along the lines of, well, these exchanges can also add quantitative data points or measures that would make these crypto ETFs more palatable from a marketing perspective, from a regulation perspective. Josh, I'm probably poorly paraphrasing that, but do you see my point there? Did you see that? And what were did you have thoughts about that?
I mean, I agree. I think that I don't think that the SEC is passing the buck here. I think that they are instead trying to create a path forward that doesn't have a million roadblocks and doesn't require the attention of the commission for
Every
things.
single thing.
Yes, and where we can say, okay, this would be acceptable, right? But yes, absolutely. Exchanges, you know, exchanges can have additional requirements, but the idea is that they don't have to go through a long 19b4 review process to get approval to have rule changes.
Right. Right.
They still have to submit a rule filing with the SEC
Yep.
when they are looking to list and trade ETPs that don't meet those generic listing standards. So I just think that, I agree with you.
David, do you agree? And I guess the follow-up question for you, David, and we have this conversation with colleagues that are beyond legal. Certainly, they're in banking, they're in crypto, in a whole bunch of different fields. The commentary around, well, there's going to be a flood of crypto ETFs. Is there going to be a flood, David?
I mean, it depends what you consider. It's one of those funny political quirks. What do you consider a flood? So, from different accounts, we could see maybe 80 to 100 different sort of filings in the next, 2-3 months. But I would also qualify that by saying, if you see a bunch of index filings that are just sort of slicing and dicing different groups of tokens, I don't know if I view each one of those as sort of singular as compared to the broad amount of them. But look, ultimately, I think, Josh, you've been through this process, but I've been through the process of submitting drafts and waiting for comments, and then, responding to the comments and waiting for drafts. And regardless of who's running the SEC, it's a very time-consuming process. And so if they can set out a bright line of these things need to be met in order for, filing to move forward, I think that's important. And let us also be clear that issuers are very, very aware of making sure that their disclosures, that all the things in their offering documents are buttoned up. Because one of the first things people litigate on is, oh, your disclosure said this and you did that. Or, oh, you intimated this and you did that. Like, you weren't clear about your intentions. And so there's a lot of time, effort, sweat. I used to say wasted paper, but that's not an issue anymore. But that goes into these drafting. So I think it's a little bit of a misnomer that people aren't spending the time and effort to make sure that these documents and the offering documents are as specific as necessary and are disclosing what they need to disclose.
Yep. Josh, I felt you wanting to add something.
Yeah, that's an excellent point that David raises. Excellent, no surprise. But this isn't saying that the issuers don't still have to disclose, right? That is not what it's saying at all. It's just trying to streamline a process, which, if we think about all of the things that we're asking the SEC to do, right? All of the kinds of things where we want guidance, or we want a clear path, or we want something like that. Do we really want them to have to spend time looking at each substantially similar application separately? I mean, as a practical matter, it seemed like things were moving, in kind of a cadence. But I think some people, I should say, had been trying to read into something about why things may not have moved more quickly with respect to the ETFs. And, I think we'd heard from certain staff at the SEC in various forums, that there actually wasn't some like mystical reason, like animating why there was a bit of a stall. But look, lo and behold, now we do have a clearer path. I think also it's important to remember, people are, DATs are a thing now. DATs are a big thing. And so, as we've often talked about, ETFs, DATs, sometimes they look kind of similar, right?
Yep. Josh, you brought up the DAT codes. We're definitely going to get to that in a moment. I wanted us to put our futurist hat on and just bear with me for a moment. We've got an SEC, we've got regulators broadly that are trying to lay out clear guidelines and rules of the road for crypto in this space. We have large swaths of traditional Wall Street now dealing with or being involved in either crypto or tokenization in some way, shape, or form, or both. David, let me ask the question. If we get hundreds of crypto ETFs, will the major mutual fund companies begin offering them to clients?
Well, look, I think they certainly will. And they certainly at some point will just offer their own, so they could offer their own to their clients and profit from them. I mean, we have to be mindful too. I think the three of us know this, but offering another company's ETF, the profit margin is pretty small on that for the. And I, on some levels, it shouldn't be about that. You're supposed to, as a fiduciary, you're supposed to offer, all the different products to your customers, and it shouldn't be driven by what commissions you make and what fees you get paid. But these are businesses, and so sometimes these are some of the concerns. I do think that we are very close to a tipping point where wirehouses, and I've had conversations with a wirehouse that is not offering many crypto products, who came to me and said, look, we want to have a strategy for offering crypto products, and asked me, like, well, what crypto products do you think we should offer? And like, what would we need to do from a compliance and regulatory standpoint? And I thought that was a great question. Obviously, I have views on this, which I shared. But, I do think we're at a stage where it will be really hard for certain wirehouses not to offer these products, or run the risk that certainly younger customers, 40 and under and more than that, are just going to say, look, I'm going to take out X% of my portfolio because I want to access these products, and you're just not offering them to me.
David, let me, I probably should have said wirehouse. So I apologize for conflating, but let me ask this question, because we've talked about wirehouses for a long, long time. I know you've had conversation with one or more that you mentioned. I guess, does this finally also take away what many wirehouses have said previously, which is, well, we just don't have the demand?
Yeah, I've always been somewhat skeptical of that argument. It's sort of one of those statements that somebody can say to you, and you have no real way of proving them wrong because it's hearsay otherwise. But ultimately, if you see the trading volumes on Robinhood and on some of the, Schwab and some of the other online brokers, that seems to belie that line of response we've gotten.
David, Josh and I both knew you were skeptical, and for the record, so were we both. David, Josh, let's move on. There's still a lot to cover. Josh, you brought up the DATCOs. I'm still not used to DATCOs. I keep saying crypto treasury companies, but forgive me. Josh, let me ask, it feels like there's a new DATCO every day. Have we reached peak DATCO? And if not, why not?
So not even close, in my view. Not
okay.
Yeah, I mean, I think the fact that some people don't know what a DAT is means we have not reached peak or anywhere close to it. I think that, I think some of, I have a lot of thoughts about them.
I believe something here, David. Go ahead, Josh.
Yeah, well, some of it I've said in our prior conversations, including about these strategies, and what we're seeing in terms of right now we're seeing fundraising premiums, right, that are kind of differentiating. Query what happens over time as maybe that recedes, and you actually have to look at what is your strategy here beyond a fundraising premium. And I think, kind of as I think noted maybe last week, or though maybe I didn't, maybe it's just in my mind, this idea that certain projects are starting to now say, well, our strategy is we're going to also invest in other DATCOs, right? And sort of the challenges that we've historically seen both in our industry and in the broader financial system with these kinds of strategies. I do think one thing that I've been hearing a lot, though, is that there is a real challenge to find appropriate CEOs for these DATCOs. That is a big challenge. And because you want someone experienced and you want someone who will be able to steer the ship. But are people willing to take the risk?
Josh, that's a pretty limited, it's a really great series of points you made. And that's a pretty limited pool, I would argue, of the correct experience in financial markets, the correct experience in crypto, the correct experience in regulation. Are you concerned about what that means for the hiring pool and who some of these DATCOs will put in those seats?
Yes, it is. I think this is why diligence, even though, as we've noted, these often are quick
Right.
investment demands. But really, I think in addition to looking at what kind of a, is the, I'll call it a shell, right? Is
Mm.
whatever is being used for this, is it clean? How dirty is it? Right. But also looking at the team, and of course looking at who are the faces out front, because as noted, some people may be a little bit hesitant to have their face be associated with a DATCO right now,
Yeah.
because they may not and probably won't all be as successful as, say, strategy.
Right. And
Right.
Josh, right. And in deference to everyone that's out there, there are some very qualified people that are the faces
100%.
of some of these DATCOs, and I don't envy them the task. David, jump in on this. And the one thing I want to throw out there before we start talking about the first order derivatives of DATCOs, I guess I've got to ask the question, David, which is, as premiums between exchange listed prices and the underlying begin to compress, how do we still have this demand?
Well, first of all, I want to say that I might know a co-host of ours, Josh, who could be, very qualified to be a CEO of one of these debts. I think someone with a lot of markets experience and, the right amount of pragmatism and conservatism could be a steward for one of these debt companies. But
You mean Josh, right? You're talking about Josh?
I think I'm stating the obvious, Josh, but we'll continue on. Look, you know how my view is, it's what the market will bear.
Mm-hmm.
And if there's a demand for more DAT companies, then more DAT companies will come to the market until there's a point where there's no more demand for those companies.
Yeah.
Look, I think that some will be successful. I think the ones that I think will be most successful are ones are run by thoughtful leaders like our co-host, ones that do more than just hold the underlying asset.
Yeah.
That are staking and validating, but doing it in a way that is, proper and effective and accretive. And I think the ones that don't, once there are ETFs that come out for these tokens, the underlying for the DATCOs, I think they're going to have a lot of competition, and then will struggle to show why they are better than a fund. And there may be good reasons why they are, but I think they'll have to differentiate themselves.
Kind words, David, and I appreciate it. And David, Josh, it does lead me to one comment there, and you kind of alluded to it, which was, are DATCOs in the aggregate and in the long term the crypto version of money market funds? And it's sort of a loaded question, and I think this might be the second week in a row where I've thrown that out there, but it does draw interesting parallels. You can disagree. Please tell me I'm wrong. My wife often does.
I will say this. I don't see that right now because they're not trading like money market funds.
Fair.
They're trading all over the place. And I think one of the challenges is that I think that DATCOs are successful because it's an access issue. There's still institutions and other players who either can't buy crypto on a native crypto exchange or aren't comfortable doing it.
Yeah.
And this is one of the only places where they get access.
Yeah.
So like the reason why GBTC was so successful was that it was a traded product that you could buy on an exchange. Nobody could hack your GBTC, and you knew where it stood on your portfolio, and it was consistent, and it was in a wrapper people are comfortable with. So these DATs are the same thing. They're in a wrapper people are comfortable with. They're on exchanges or places, Schwab, Robinhood, or wherever, where you can buy them and you can hold on to them, and you don't have to worry about them disappearing.
Yeah.
So I think as we get funds that come in, and create more options to get access to these products, I think that's when you'll see the DATs sort of having to, differentiate.
Yeah, David, good point. And Josh, I'll just amplify what you expressed earlier, and I'm sure David will do likewise, is, for everyone out there, obviously none of this is investment advice, but do the due diligence. And certainly with the level of innovation and the speed that some of the market developments are taking place, due diligence is more important than ever. David, Josh, there's so much going on in the market. I want to throw one last one out there, and we've got a bunch of announcements to talk about as well, and certainly want to open the floor for anyone who's watching us. Thank you so much for tuning in. If you've got questions for David or Josh or I, please put them in the chat. David, Josh, a bit of interesting news that crossed my desk the other day was Tether coming to the US. And I have to be perfectly honest, I haven't dove too deeply into it yet, but the first thought that I had, David, was, well, what does this mean for the other stablecoin providers? I think competitive landscape is overall good, but it's had a lot of interesting pushback in the news and the media. David, Josh, what were your thoughts?
I have a lot of thoughts, but Josh, why don't you jump in first?
Let me gather some additional thoughts, but I will give some quick thoughts, which just are, I think it's really interesting, and I think potentially, dare I say, smart, that for Tether entering the US, they've appointed Bo Hines as the CEO, given his relationship with the administration. I think, one of the things that, rightly or wrongly, Tether over time, we've seen it evolve, right? We've seen a lot of changes back since Bitfinex, iFinex, all that stuff, and It's not the same, right? It's a very different, in my view, a very different situation. I do think that one of the things that my understanding is that Tether, you can freeze and seize, right, and deal with sanctioned addresses and things in that way, which many people may not be aware of. I know you guys are, and at least that's my understanding. I think that by aligning with the administration, where the administration has taken a strong view in certain instances with respect to sanctions, I think that how can I say? I think that they're making a smart move in connection with their entrance to the U.S.
Josh, I agree with you. David, I know you've got a lot of thoughts, but let me throw this out there to give you that opportunity to let those thoughts come out. Is this a very sophisticated play for a presidential pardon?
I'm not going to wade into that one.
Okay.
But I will say that, look, they have the most experience running a stable coin, both on a volume and sort of tenured basis. It makes sense to have a specific one for the U.S. and enable it to follow the guidelines in a way that will be meaningful and regulatorily compliant. Mm-hmm. And I think ultimately a lot of the stable coins are going to come down to, like Josh said, the ability to freeze and seize, the ability to run on a blockchain that's effective and efficient, whether it's off Ethereum or their own, but also what kind of deals that they make with the distribution networks. And so ultimately, while individuals aren't going to get yield, I think that companies they partner with will get, whether it's rewards, whether it is rebates, they will get some value from this, and it's just going to be what is the best blockchain, or what is the best stable coin, and what is the best business deal you have, and taking those in mind, you'll decide which one a company wants to partner with.
Yeah, and David, it was a poor attempt at a joke. We don't.
No, it's fine. It's fine.
So don't take that the wrong way. Josh, go ahead.
Well, so as Ron, you pointed out, I've lost my pool. As you can see, I'm merely sitting in front of a wall. It's exciting. With a bit of
technology.
Weird window covering. But the emperor has no clothes. No. Yeah. So I would say, just with respect to Tether, and I'm not saying I'm an emperor or anything like that, or that I'm not wearing clothes, but you know what I'm saying. With Tether, I would just note that an important piece of this, I think, is the tie-up with Anchorage, right? I think that by selecting Anchorage Digital as their partner to roll out the stablecoin, Anchorage does have the OCC charter, the federal charter. And so I think that is another demonstration of Tether's, I don't want to say attempts, because that sounds like it's not succeeding, but it's steps to show an intention, to comply with U.S. law.
Yeah, and Josh, to that point, for everyone in the audience who they probably know this, but just to state the obvious, Tether is by far and away the largest stablecoin issuer
100%.
in the world and a significant holder of a wide variety of assets, including U.S. Treasuries. I think notes and bonds. I don't think bills, but David, I could be wrong. Josh, David, I agree with you, and I think the thing that's important, this is going to be a distinct token stablecoin, if I recall correctly. But it will be interesting to see how Tether addresses what's often been the longstanding critique, which is from an audit perspective. When you look at how things are audited, they've done these attestations overseas. In the U.S., they'll need some proper audits. It'll be interesting to see how they approach that. But Josh, to your point, they're already working with Anchorage. You've got to imagine they'll be working with really sophisticated players in the space that will be doing the audit that's required for a company of that magnitude issuing the instruments that they do. So it'll be interesting to see how that develops. Go ahead, Josh.
I was just going to say, and I know a lot has changed, but I think so. It just one of the things that came to mind when you guys were talking about what Tether is backed by. I remember under the prior administration, where I believe Michael Hsu, who was the acting head of the OCC, had cautioned about Tether, saying at the time that it was largely backed by commercial paper. I believe that that's been changed, but it's just interesting now. After having the cautionary statements by the acting head of the OCC under the prior administration, that now Tether's entering the U.S. with, a relationship with an OCC chartered entity, which is Anchorage. So I just think it's shows the progress that's being made.
Yeah, indeed. Josh, David, there's a lot going on in this space. I'll just share some really brief announcements. Would love your collective thoughts. We're about running out of time. We did a wonderful webinar with our friends at Boltz Technologies on quantum and its impact on Bitcoin and blockchain and cryptography. Really worth watching. Now I have to read quantum computing newsletter. We don't have enough to read. It's available on our YouTube channel as well. And obviously the big event in New York City, October 23rd, the WSBA Crypto and Blockchain Summit 2025. You get to see David Brill, you get to see Josh Klayman, you get to see, I think, a couple of dozen other members speaking on really important topics. We do have a block of public tickets still available. The link is on our website. If anyone's got questions, drop us a note on info@wsba.co. Really looking forward to doing that. Josh, next week, you and I are speaking on separate panels in the UK, and it's interesting. Shout out to our friends at Global Legal Group. Really looking forward to their symposium. I'm interested, Josh, because a lot of the conversations we've been having with our colleagues overseas has been almost kind of a reverse of what you and I and David were talking about a year or two ago, which is the US is speeding ahead in the crypto space. It feels like the UK is now falling behind. Josh, are you having similar conversations? I'm interested what our London friends will say.
It's really interesting. I would say it depends on whom you chat with. Certainly, I would say that at the roundtable that I was at with Parliament last year, there were some statements just in general saying, let's get on with it, right? To the government, to the parliamentarians. And I think that message, is heard and being felt. So yeah, I don't know that our friends in the UK or in London would say that they're behind the US.
I will say one thing though, Josh. I did have a conversation with a colleague in London, and his comment was, wow, it's fascinating. You guys have regulators that are really moving forward and progressive on these things. Like progressive regulators in the United States. Who would have thought this, Josh? But I'm looking forward to seeing you.
Well, Caroline Pham was at that roundtable last week, and she gave a great speech, which I think is available online, talking about the efforts. So I would say, she is an amazing spokesperson for our nation as it relates to digital assets, and has been for some time. But yeah, I think while places may not say that they're falling behind, I would say that definitely the U.S. steps are applying pressure.
Indeed. Shout out to Hope. Go ahead.
Sorry. No, Ron, I was going to say, what is your panel on next week?
So hold on to your hats. The panel I'm moderating is with some real thought leaders on managing a crypto business in crisis.
Whoa.
which will really be the challenge. And, as we dug into it, Josh, shout out to our friends at Global Legal Group, shout out to Suzanne Mooresfield and some of my other panelists. Forgive me, I'll put their links in the show notes. It's not just cyber security, it's regulatory. It is, how do you structure dealing with potentially your largest customer being hacked and the real impact of that. It's going to be a really dynamic panel. It's also the panel right before cocktails, Josh. So I'm a little worried about attention, but it'll be great to see you there, my friend. Shout out to Hope Clary who watched. Thank you so much. This was quite informative and interesting. Thank you all. Yes, David and Josh are very informative and interesting. It's always good to have them. David, what about you, buddy?
Well, I also want to say thank you to GLG. I unfortunately couldn't cross the pond to attend, but I appreciated the invitation as well. And I don't know if your sessions will be recorded or not, but if there are, I'll certainly want to see them and see the two of you in action. This weekend, I have a lot of reading to catch up on, candidly. There's just a lot that's been going on. And I literally have all these saved things that I keep emailing articles to myself that I want to read. And so I need to read that. Then in between that, I will be catching now the two teams I root for. Michigan is playing tomorrow. And now I am, since my daughter's at the University of Miami, I am now a Hurricanes fan. So I will have a full day of Saturday college football looking forward to.
David, I've got to ask you, we'll do it offline, about Robinhood and sports wagering. I'd love your thoughts, but we're not going to do that here. David, Josh, thank you both so much. For everyone who watched, thank you for joining us. This recording will be available next week at our newsletter. Someone wants to reach out to David, so we're going to leave it there. Everyone, have a great rest of the weekend. Take care. Bye-bye.
Take care, everybody.
Bye.